banking company account. In the last class we have discussed one 24-mark problem. So one more 24-mark problem we need to discuss today. So now let us see that. Problem number 5. Problem number 5. Yes, see this. From the following information, you are required to prepare. From the following information, you are required to prepare profit and loss account and balance sheet of Dhanalakshmi Bank Limited. So now here they have mentioned you trail balance. So one by one we need to categorize the items here. Whatever the information given in the trail balance, one by one we have to diversify. So now here if you see, first thing mentioned here, that is share capital. 10,000 shares of 100 each. 10,000 shares of 100 each, that is mentioned. That is nothing but schedule number 1. You can consider this share capital under schedule number 1, that is 10 lakh rupees. Then cash in hand we know, that is schedule number 6. Cash in hand, cash with RBI, you need to consider under schedule number 6. Debit balance is given 3 lakh rupees. Statutory reserve fund, schedule number 2. Deposit, schedule number 3. Cash at bank, schedule number 7. Loans from Vijaya Bank. So now loans from Vijaya Bank. This is trail balance is of what? Dhanalakshmi Bank Limited. So it is borrowing from other bank. So borrowings from other bank, schedule number 4. So under schedule number 4 you have to consider this information. Then money at call and short notice, that is the schedule number 7. Security premium, schedule number 2. Government securities, so it is the investment made by the bank. So schedule number 8. Schedule number 8 you have to consider government securities. Loan and cash credits. Loan and cash credits, schedule number 9 you can say. Bills discounted, schedule number 9. Commission, here commission, one debit balance is given. 5,000 is a debit balance, 35,000 is a credit balance. So now what we need to do here, two side of commission is given, debit commission as well as credit side also commission amount is given. So credit side commission amount, other income, schedule number 14. Debit side commission amount, that is other expenses, schedule number 16. So like that you need to diversify here. Then interest and discount, credit balance is given. So interest earned by the bank, schedule number 13. Interest paid on deposit, that is nothing but schedule number 15. You can say schedule number 15. See this here, schedule number 15, interest paid on deposit. It is the interest paid by the bank. Premises, schedule number 10. Directors fee, schedule number 16. Audit fee, schedule number 16. Salaries and allowances, schedule number 16. Depreciation on property, schedule number 16. Printing and stationery, schedule number 16. Postage and stamp, schedule number 16. Other expenses, schedule number 16. So whatever the information given here in the trail balance, at the end if you see, from directors fees till other expenses, all these are operating in nature. Director fee, audit expense, salary, depreciation, printing, stationery, postage stamp, other expense, that is nothing but operating expenses, schedule number 16 in the P&L account. Now trail balance total they have mentioned you, that is 45 lakh 10,000 both the side 45 lakh 10,000. Then after the trail balance there are certain adjustment. First adjustment, if you see, we know adjustment appears twice usually. So provide rupees 25,000 for doubtful debt, so that is bad debt. So we are going to consider this P&L account after schedule number 16. Provisions and provisions, there you can consider provision for bad debts or doubtful debts. Then one more thing, this bad debts can be deducted from loans and advance, schedule number 9. One is after schedule number 16 in P&L. Then second information, that is in the balance sheet from the schedule number 9 you can deduct this bad debt amount. Then next is make provision for income tax, that is 30,000. So now provision for income tax, again after schedule number 16 you can write income tax. Then what happens, other liabilities and provision, schedule number 5 in the balance sheet, there you can consider income tax. In the previous problem also we have seen income tax deducted at source, we have considered under other liabilities and provision. Then average due date on the bills discounted is 60 days including the grace days. The bills have been discounted at 10% per annum. So now here bills discounted information we want. Bills discounted information is given in the question. If you see trail balance, somewhere it is mentioned bills discounted 1,50,000. See this 1,50,000 into rate of discount. Rate of discount we know that is 10% every year. Then 60 days, that days also they have mentioned. They have calculated the days and they have given 60 days including grace days. So total 60 days, 60 by 365 if you do, you will get the amount. Then bills for collection amounted to 1,50,000. So now bills for collection is footnote to the balance sheet. This one you have to remember. Bills for collection, if it is given in the question, so you can consider after schedule number 12, that is after contingent liability, that is footnote. Then acceptance on behalf of the customer amounted to 80,000 rupees. So now this acceptance on behalf of customer is nothing but contingent liability. It is a contingent liability, schedule number 12. So there you can consider this information. Then next, transfer 20% to statutory reserve fund. So that is P&L part 3 total. From that you can take 20% for statutory reserve purpose. So all these information we have discussed, whatever it is mentioned here. Then now next thing we need to discuss regarding schedules to profit and loss account. Schedules to profit and loss account, that is a solution part. See this answer. Before that, one small working note you have to do, that is calculation of rebate on bills discounted, that is adjustment number 3. See this adjustment number 3. Bills discounted amount we know 1,50,000 given in the trail balance. Rate of discount we know 10%. Number of days given in the adjustment 60. So 60 divided by 365. So if you calculate this, you will get rupees 2466. So this rupees 2466 is rebate on bills discounted of the next year. So what you have to do, you can deduct this from schedule number 13, interest and discount earned by the bank. Interest earned by the bank. So schedule number 13 total minus rebate on bills discounted, and same amount you can show under other liabilities and provisions also. Yes. Then schedules to profit and loss you have to do here. Schedules to profit and loss, if you see, there are 4 schedules to P&L we know. That is 13, 14, 15, 16. 4 schedules are there for P&L. So now what we have to do here, schedule number 13, interest and discount. Interest and discount comes in the schedule number 13. Why? Because it is given credit balance. Credit balance is mentioned here. So that is why what you have to do, you can consider this as an interest earned by the bank. So 7,25,000 we can consider less. See this, less rebate on bills discounted. Rebate on bills discounted we have calculated separately 2466. This 2466 you can deduct from schedule number 13. So finally schedule number 13 answer you will get, that is 7,22,534. That is regarding schedule number 13, interest earned by the bank. Now next thing here you have to see schedule number 14. Schedule number 14 is regarding other income. Other income. So there is only one other income. If you see the trail balance, there is only one other income given, that is commission. Commission, there are 2 types of balance. 5,000 is debit balance, 35,000 credit balance. So now other income we have to consider credit balance. So credit balance of 35,000 you can write in schedule number 14. See this schedule number 14 we have written credit balance commission. Schedule number 15, interest spended by the bank, interest expended by the bank. So here interest paid on deposit is a expense to the bank. So you have to consider under schedule number 15. Total, only one information, directly you can write the total, the outer column, that is 1,55,000. Then schedule number 16 we know there are several informations they have mentioned in the trail balance regarding schedule number 16, operating expenses as well as other expenses. So if you see director's fee, that is operating, audit fee, salary and allowances, depreciation on property already calculated and given, printing and stationery is mentioned, postage and stamps is given, other expenses is given, and commission debit balance. Commission credit balance we have considered under 14. Commission debit balance you can consider under 16. So now schedule number 16 total we want. So add all these things, that is director fee plus audit fee plus salary plus depreciation plus printing plus postage plus other expense plus commission. You will get schedule number 16 total that is 1,15,000. Then after writing these 4 schedule information, then there is provisions. So provision you have to do separate working note. So separate working note you can show here. See this, provisions and contingencies. So under that there are 2 types of provision given in the adjustment. One is bad debt and one more is income tax. So now if you know here clearly, first provision for bad debt. Provision for bad debt is 25,000. So that is given in the adjustment directly. If you see this 25,000 directly mentioned in the adjustment. So directly you can consider there. Then provision for income tax is also given in the adjustment. So that is 55,000. That is also mentioned in the adjustment. Yes. So after this, after preparing the schedules to profit and loss account, next thing we have to do here, main format of profit and loss account. So now main format, let us see the main format here. P&L account for the year ended. If you see, there are 3 columns. One is particular, one is schedule number, and one is amount column. We know in the P&L account there are 4 parts. First part we have to consider, that is income. Income, under income there are 2 information, that is interest earned and other income. Interest earned, schedule number we know 13. So interest earned total. Interest earned total we want, see this information from the schedules to profit and loss account, 7,22,534. You can consider here interest earned. Then other income, schedule number 14, that is only one information, commission 35,000 we have entered. So now we want total of income. Total of income is nothing but 13 plus 14. So 13 plus 14 you do, you will get total of income, that is 7,57,534. Next we want expenditure. Expenditure we know 15 plus 16. So now 15 is interest expended, that is interest on deposit paid by the bank, only one information, 1,55,000. Then operating expenses, there are several expenses are given. We have done the total here. See this schedules to P&L total 1,15,000. 1,15,000 you can consider under schedule number 16 here, operating expenses. Then provisions and contingency, there are 2 types of provision, bad debt and income tax. Add both and write provisions and contingency, that is 55,000. See this, 30,000 income tax, 25,000 bad debt. So now total of expenditure we want, so that is 15 plus 16 plus provisions and contingency. If you add these 3 information, you will get answer as 3,25,000. So now after knowing income and expenditure, next thing we can here do, that is nothing but in order to determine whether there is a profit or loss for the year. How to determine? Now we have to see here which side is more. Income, if you see 7,57,000. Expense, if you see 3,25,000. Income is more, that means there is a profit. So net profit for the year, income minus expense you do. Income total 7,57,534 minus expense total 3,25,000. Remaining balance amount, that is net profit for the year, that is 4,32,534. Next, profit and loss brought forward. What happens here? Here they have not mentioned regarding any profit of the previous year in the trail balance or any loss of the previous year in the trail balance. If they have mentioned, you can consider here, but here they are not given, that is why we will take it as nil. Then we want P&L total, no other information under part 3, P&L main format. So directly net profit for the year itself is the total, that is 4,32,534. Next you have to see appropriation. Under appropriation we know first you have to appropriate 20% to the statutory reserve, then other reserves you can do, then if there is any remaining balance you can give it for shareholder, dividend to the shareholder. So now if you see here, transfer to statutory reserve balance, they have given, that is 20%. So that is nothing but on the P&L net profit answer, that is 4,32,534, take 20%. If you take 20%, you will get transfer to statutory reserve, that is 86,507. So that answer is over. Then transfer to other reserve, not there. Transfer to proposed dividend, not there. Balance carried over to balance sheet, final answer here, that is 3,46,027. How to get this final answer? 3,42,534 minus statutory reserve 86,507. You will get 3,46,027. So finally we want the total of profit and loss account, that is 4,32,534. So this is how you are going to prepare the schedules to the profit and loss account and format of the profit and loss account. Then after discussing this P&L account information, then next step here we have to prepare, that is schedules to balance sheet. Schedules to balance sheet we have to prepare. There are 12 working note here, so we will prepare the schedules to balance sheet. Now schedule number 1, if you see schedule number 1, only one information given, that is share capital, that you paid up capital 10,000 shares of 10 each given in the trail balance. So directly you can write here schedule number 1, that is 10 lakh rupees, 10,000 shares of 100 each. See this, 10,000 shares of 100 each, that is 10 lakh rupees. Then schedule number 2, that is for statutory reserves and profit and loss information. So here statutory reserve we know, that is 5 lakh rupees. This statutory reserve given in the trail balance, that is why you can consider that directly, that is 5 lakh rupees. Then addition to the statutory reserve also you have to do here. Addition, how to do the addition here? We have already calculated 20% of the profit as a statutory reserve. So that balance from the P&L account you have to transfer to the schedule number 2. So schedule number 2, add 20% of the net profit, that is nothing but this answer. See this, 86,507. Directly transfer to the balance sheet format here. 86,507 added to the statutory reserve. Then security premium account information given in the trail balance, it is mentioned, that is 50,000. P&L balance. So then next we want is profit and loss account balance, that is nothing but balance carried over to balance sheet. That is balancing figure we got in the P&L account, fourth part. So that you have to consider here. See this, balance carried over to balance sheet, answer 3,46,027. Same answer you have to consider here. Yes, after that you have to do the schedule number 2 total. So that is statutory reserve 5 lakh plus 20% of net profit, security premium you have to add, then profit and loss account you have to add. Then schedule number 2 total you will get, that is 9,82,534. Then schedule number 3 we know, deposits with the bank. So deposit with the bank, there is only one information directly mentioned in the question, that is 15 lakh rupees. Then schedule number 4 is for borrowings from other bank. So here this bank has borrowed the money from Vijaya Bank. So that is why that is schedule number 4, 7 lakh rupees. Then schedule number 5, there is provision for income tax. This you can write under schedule number 5, that is other liabilities and provision. Then rebate on bills discounted, that is calculated in the working note. After deducting from schedule number 13, you can consider here under schedule number 5. So here rebate on bills discounted is 2,466. Then schedule number 5 total we want, that is 30,000 plus 2,466. That is 32,466, schedule number 5 information. Then schedule number 6, if you see here schedule number 6, that is cash in hand. So cash in hand, if you see it is given directly, cash in hand is given directly in the question, that is 3 lakh rupees. So we know that schedule number 6, that is regarding cash in hand and cash in case of current account, cash kept by the bank in the current account of RBI also you can consider under schedule number 6. So after this schedule number 7, that is balance with bank. So balance with bank we know, one is 5 lakh, balance with bank one is 5 lakh. So that is schedule number 7. If you see the trail balance, so now let us see the trail balance here. They have mentioned here cash at bank. See this, cash at bank 5 lakh rupees. So this 5 lakh you can consider under schedule number 7. Schedule number 6 we know, that is cash in hand. Then in the same schedule number 7, there is money at call and short notice as well. So this is interbank loans of the bank. So that is 3 lakh rupee given in the question, given in the trail balance. So now schedule number 7 total you do balance with bank plus money at call and short notice, 5 lakh plus 3 lakh, that is total is 8 lakh rupees. Then schedule number 8. Schedule number 8 is regarding investments. Investment is comes under schedule number 8. Investment in bonds by the bank, investment in PF instruments of the bank, then investment in government securities of the bank. So here government securities given here, schedule number 8. So directly you can consider 8 lakh rupees. Then schedule number 9. Schedule number 9 we know, loans, cash credit and overdraft. Or schedule number 9, the head of the schedule number 9, that is title of the schedule number 9 is loans and advance. So here loans, cash credits and overdraft given together, that amount 18,05,000 given in the trail balance. So from this amount you have to deduct the bad debts. You have to deduct the bad debts from overdraft, loans and cash credit, that is 25,000. So you will get the remaining amount, that is 18,05,000. Bills discounted you can write under schedule number 9, that is separately 1,50,000. Schedule number 9 total we want, so that is 18,05,000 plus 1,50,000, you will get 19,55,000. Schedule number 9 total. Then schedule number 10 is regarding premises. Schedule number 10 is regarding fixed asset. Any fixed asset given in the question you can consider under schedule number 10. Here they have mentioned premises. It is like land and it is like building. Premises is equal to building. So schedule number 10 premises, that is 3,60,000 directly given in the question. Schedule number 11, it is not there, nil. Usually schedule number 11 consists of banking assets of the bank. Schedule number 11 consists of any other information if it is given, any other items which do not belong to the fixed asset category, you can consider under other asset here. So schedule number 11 is not there in this question, that is why it is nil. Schedule number 12, that is contingent liability. So here acceptance on behalf of the customer is mentioned. So acceptance on behalf of the customer is one kind of contingent liability. Why it is contingent liability? Because it depends upon the happening or non-happening of the future uncertain event. So that is why it is contingent liability. Schedule number 12, you can write the total here 80,000. So we have discussed regarding the schedules of balance sheet. So after discussing this, you can directly prepare the main format of balance sheet. So you have to prepare the, there are 4 steps, you can say there are 4 steps in banking company account. So first step, preparation of schedules to profit and loss account. Second step, preparation of P&L account main format. Third step, preparation of schedules to balance sheet. Fourth step, preparation of balance sheet main format. So now fourth step we have to do, that is preparation of main format here. Books of Dhanalakshmi Bank Limited, balance sheet as at 31/3/2016. So now what you have to do, particular, schedule number and amount. There are 3 columns, particular, schedule number and amount. Then we know this is the vertical form of balance sheet. So whenever there is a vertical form of balance sheet, first thing we have to write capital and liabilities. Capital and liabilities, under that there are 5 schedules. First one, capital. Capital is nothing but share capital given in the question, that is 10 lakh rupees. Then reserves and surplus, that is schedule number 2. Reserves and surplus schedule number 2 total we have calculated under schedules to the balance sheet, that is nothing but 9,82,534. So same total you can enter here under reserves and surplus with the help of schedules to balance sheet. Then deposit, schedule number 3, only one information given directly in the question, that is 15 lakh. Borrowings from the other bank, borrowings from Vijaya Bank, that is 7 lakh rupees, that is schedule number 4. Other liabilities and provision, schedule number 5, total, that is 32,466. Now we want the total of capital and liability. So you have to add 1 plus 2 plus 3 plus 4 plus 5 schedules in order to get the total. So here total is 42,15,000 rupees. So after writing capital and liabilities, next step we have to consider asset. So under asset there are 6 schedules, 6 to 11, 6 to schedule number 11. So first one, schedule number 6, under asset if you see, cash and balance with RBI, that is schedule number 6. Amount we know, that is 3 lakh rupees. Then next thing comes here, balance with bank and money at call and short notice. So balance with other bank you can consider here under schedule number 7. Money at call and short notice information you can add here under schedule number 7. So total of this, that is 8 lakh rupees, that we have calculated already. Schedule number 7, see this total 8 lakh rupees already calculated. Then investment is schedule number 8, that is investment in government securities. So that is schedule number 8 information, only one item here, directly you can consider 8 lakh. Then advances, loans and advances, schedule number 9, that total is 19,55,000 rupees. Then fixed asset, schedule number 10, that is 3,60,000 rupees. All these total we have to see from the schedules to balance sheet. Then other asset, schedule number 11, that is nil, not there. Now we want asset total. So asset total is nothing but 6 plus 7 plus 8 plus 9 plus 10 plus 11 schedule. So you will get 42,15,000. Now you have to compare whether asset total is equal to liability total. Here it is equal, 42,15,000 both the side. After that you have to consider one more working note, that is schedule number 12, contingent liability. So contingent liability, if you see, that is just below the asset total, that is schedule number 12, contingent liability, acceptance on behalf of the customer, that is 80,000 rupees. Then after the contingent liability, one more thing you have to write, that is footnote to the balance sheet. Footnote to the balance sheet doesn't have any schedule number, that is why you have to consider dash here. So bills for collection dash, so that is footnote to the balance sheet 1,50,000. So this is how you are going to solve this 24 mark problem. So I hope everyone understood whatever we have discussed in this class.